For this month in Alabama housing, we have several articles that are affecting our local Huntsville, Alabama real estate market. The first one, the biggest one, is the Federal Reserve has raised their overnight rates again by 0.75%. A lot of people on the street would think that that would actually correlate to higher mortgage rates. In fact, it hasn't. We actually had the biggest drop in mortgage rates in 2 years of 31 basis points, which is 0.31%. Over this week. And the reality and the reason for that is the market had already baked in these expectations of the Federal Reserve rate raising the rates. And then also there was a little bit, I think there was about a 50-50 chance that they were even going to be more aggressive in their stance and going to a full basis point. So the market sighed a little bit, and a lot of this has already been baked into the interest rates here in Huntsville. So with rates lower and inventory starting to creep up, inventory is still a little bit less than 2 months. It's still considered a seller's market. You know, that seller's market, or that balance market, really is that 4 to 6 months worth of supply. We're still below that at 2 months, but with more supply, healthier rates, we're seeing a couple of things. Number one is we are seeing more buyers enter back into the market, more multiple offer situations than we've seen in the previous weeks. However, we are seeing a lot more buyers that are including inspection clauses and even getting repairs negotiated during that request for repairs process. That's a positive sign for buyers right now. There's also an opportunity in new construction in this market right now, and the reason for that is based on builder strategy. So over the last couple of years, a lot of builders have been burnt by rising material costs, and so they've had a lot of fixed rate contracts, pre-sale contracts, where they've ended up either being upside down or selling the home at a $0 profit as material prices rise. And so what the builders have done, a lot of them have shifted their strategy from a pre-sale type market to a spec home, a speculative market, where they build the homes and then they price them towards the end of the completion, because from their mind's standpoint, they know what the cost of the home is, and they also don't have to communicate with a buyer, hey, we're continuing to be delayed on this home. So that's the reason the builders that shifted to this market. Now the challenge is we have a slowing market in terms of demand, and so with that, there's actually going to be a little bit of a glut of supply in the new construction market over the next 6 months as this inventory becomes available. A great opportunity for buyers right now to go in and capitalize on. A lot of builders are offering incentives right now. I think it's a very short window that buyers can capitalize on this, because builders are already starting to slow down their speculative building for future months. What will actually likely happen with this is, as interest rates are still higher than they have been, builders are going to slow down their building. Looking at builder confidence is actually down nearly 18% month over month and over 31% year over year. It's down from a high of 84 to 55. And the reason that's important is, look at this chart. Builder confidence closely models home sales and the inventory that comes on the market. So as builders slow down the amount of homes that they're building, that's going to also affect this supply challenge and this 5.5 million home deficit that we have in this country. All right, so the last stat that's going to catch a lot of people's attention is really a misleading stat, but it says locally home sales were off 9.5% from last month. So year over year, down 9.5%. But if you look at the chart here, it's still, that's 9.5% from historic highs. We're still approximately 2 times the number of sales that we had just a decade ago in 2012. So here's my recommendations. Number one is new construction is on sale right now. If you're in the market for a new home, now is a great opportunity to take advantage of that. The second thing is, I think it's very possible that rates continue to increase over the next few months. And so this is a short window, I think, to capitalize on, a little bit of a dip in the interest rate market. Now, I do think at the November elections and beyond, we are going to probably see interest rates start to fall again. If not by November, certainly probably next 12 to 24 months would be my personal best guess. And so go ahead and look at locking in your prices. So today, lock in your rates, and then you're able to refinance that rate as we're looking at potentially getting lower rates, as the Fed says they want to lower rates over the next couple of years.